Hey everybody, this is Brian Shannon from alphatrends.net. Today is Tuesday, the 26th of February, 2013. I wanted to update those of you who are not subscribers about the market right now. Since we had that video on Friday, a lot has changed, obviously. Yesterday we had the big gap higher that failed, and today we recovered some of those losses. We were up $1 in the S&P 500, but it's definitely not clear that the worst has been seen yet. I'm looking at the daily chart right now, and just this little peak from late last year, I think, kind of ties in with this. I'm sorry, so since September, kind of ties in with that 50-day moving average. The 50-day moving average is right now down at 147.85, and that still seems like a likely target that we're going to drift down towards perhaps in the coming days. We do have a market that's gotten very volatile in here, and we have a pattern of lower highs and lower lows below a declining 5-day moving average. We were talking about the market needing to get above that 151.5 and hold. Well, it got above, but then completely failed. Now today we've seen a little bit of recovery, and it's not clear, to me at least, that the buyers have regained any kind of control that we can look at with conviction. In fact, if you look at the 2-day volume weighted average price, the S&P 500 came just below that level. So you want to keep track of the week-to-date volume weighted average price to just kind of get a sense of how the buyers are able to come in and perhaps regain control. But with this declining 5-day moving average and the fact that we are below that 2-day VWAP, I think we still have to exercise a lot of caution in this market right now. When we take a look at a 65-minute time frame, there's a couple things I want to point out here. One, we've got the Fibonacci level from the December 31st low, and that ties in right at about that 148 level as well. And again, 148, actually we can see it here on the daily time frame a little bit more clearly, maybe, that it ties in with that 50-day moving average and the peak from late September. So that still looks like a pretty reasonable area that this market could drop down towards. And then when we take a look at a volume weighted average price year to date, you'll see that we got down to that and slightly through it and found a little bit of support today. Excuse me, the volume weighted average price from the low on December 31st, we came down right into that area. So this appears to be, for now, a little near-term level of support for the market. But you have to look at, again, the 2-day volume weighted average price just ahead, and we've got this prior little area of support. We could call it 150 to about 150 and a half, that this should likely become a band of resistance, and I think lead us down towards about 148. So we're not out of the woods here by any measure, it doesn't look like. The NASDAQ did make a new low for the year and recovered. So it got back up through that level and saved a bigger sell-off for now, at least. If we take a look at the Fibonacci off of the December low, you can see that we got down to a 50% retracement. If that's not clear, we're just taking from this low up to the high, and you can see that line right here, this 50% retracement at about 65.95. So we broke down through the support level that we've been looking at, and the market got back up above it. So perhaps a little bit more rally up, and then it unfolds a little bit further and probably comes down and closes that gap, I would think, here maybe in the coming weeks. The Russell 2000 did recover a little bit as well. This market, here we take a look at the 2-day volume weighted average price. We fell short in there as well. If we take a look at some important levels from, we could take a look at the Fibonacci from the beginning of this year and say we came down and retraced close to 2/3 of it. Or I think it's more important to say, since this move began, and the move really began off the lows in December, and you can see that a 38.2% retracement gets us down to about that 88.5 level. So today's low was 88.79, and this appears to be maybe a level of near-term support is 88. 50 to about 88.75. If we make a little bit of a higher high here, sorry, lower high here, and then break down, I think that we're likely headed towards about that 87.5-ish area. We can also take a look at the volume weighted average price since that low and see that that ties in almost precisely with the 38.2% retracement as well. So what I'm doing here is taking this VWAP line. We could represent it as a moving average, but I'd have to change the setting of the chart. But you can see how that line moves and comes in right there. So so that is obviously, this 88.50-ish area is an important level for now that we'll want to keep an eye on. And if we can maintain above that, then we'll save a bigger sell-off for later. But I think the more likely scenario is that we bounce up, maybe even above 90, and then kind of come down and chip away at this support and then break down through it. The semiconductors also came down to an important level. If you take a look at the December lows and the Fibonacci here, we can see we're basically at a 38.2% retracement. And if we take a look at the volume weighted average price from the low of December, almost the same story as the Russell 2000. That is, it ties in just about precisely the volume weighted average price with the 38.2% retracement. The VWAP basically from this point through today's trading is right here at about $34.30. So it appears maybe the semiconductors could bounce a little bit, then break down further, but they're definitely not to be trusted here in the near term. 35.20 is really the bigger level of importance that this market's going to have to get above and hold above to kind of feel better about these once again. And the financials, they were up 9 pennies today, but you can see that they clearly, they broke that 1770 level that we thought was going to be resistance on Friday. And we came down through that 1740 level next, and looking at a 65-minute time frame, once again we can kind of see some of the same numbers setting up in here. That is, we could take a look at the volume weighted average price from the December low, right, and that's basically mid-December really, and we came down real close to that, and this is at 1715, 1720 level. So I think a bounce from here, a little bit further bounce, maybe up to 1750, 1760, and then kind of chip away at that, and perhaps we get a little bit lower. We did test that 50-day moving average though, and that's good to see that we came just a couple pennies off of it. A lot of times we'll go slightly through these important moving averages because it kind of shakes people out in there. We can also look at the Fibonacci off of the lows of the fourth quarter and see that still a 38.2% retracement will get us down towards that 1680 level. So I think that overall you have to look at these markets as they've been damaged pretty badly here the last couple days, and they're going to need at least some time to heal before we can think that they are going to rally. I also wanted to update this Apple, because I was talking about Apple potentially rallying up to what had been the volume weighted average price since the earnings report and then breaking down. So I was talking about a rally up towards 458 to 459. We got up to about 456 I think on Monday, and then broke down. Today we broke below this pretty little this prior low in here. Not the low for the year, but it was an important level that we got down through, traded a little bit heavier volume and recovered. So we got back above the 5-day moving average. 5-day moving average is still declining, but I think that the scenario of trading down to 415, 420 is probably going to be held off for a little bit in here. And in Apple, if you're trading Apple today, it was up on real big. It broke beyond that volume weighted average price on some real heavy volume, traded a nice little flag, and then we saw it rally from there. But Apple is still in a downtrend. Perhaps we'll get another test of this 455 level in the next day or two, but it's still guilty till proven innocent overall, and I wouldn't look at this as a successful bottom of any kind. It could end up being part of the bottoming process, but that's going to take time to know. So just go a little bit slow in this market and let things set up a little bit better before you decide to get aggressive again. Thanks for tuning in.